Unless you have the memory of a goldfish, you should remember from yesterday's video, if of course you watched it, that when we're looking for type 1 and type 2 closes, we're trying to confirm two important aspects. See if you remember them. Pause the video if you want to. So the first one is, of course, that we're trying to confirm that that specific level is definitely a significant level. Because when we're mapping out significant levels, there are often different ways that we could have it mapped out with different anchor points, whether it's the wicks or the bodies or whatever else. And so when it comes to actually finding that trade entry, that close as a type 1 or type 2 gives us a very good indication that that level is significant based on our understanding of the different characteristics of a significant level and how the price would react around there. And the second aspect that we're looking to confirm is, of course, that the price has failed at the level. So for this video, I want to focus on that first point, the confirming the significant level, because this is a really key part of your trading. When we're looking at a trade entry, I think that essentially, broadly speaking, there are three things we're looking for there. One, we're looking for how far the price is going to move in our favor if we're correct in the sort of direction we think it's going to be going. The second is how much we're going to potentially lose if it's not going in the direction that we expect. And the third is the timing. Like, is it going to happen now? Where is it going to happen? These are the three things that we're trying to figure out. And I want to help you out with that third point of whether it's going to happen at this point in time. And that's also what we're trying to figure out when we're trying to confirm a significant level. Because if we're right with our significant level, then that reduces the uncertainty in our position. And if you're new to the channel, then get used to me saying uncertainty rather than certainty. Because the way I see it with everything in trading, you can't be certain about everything. You can't predict exactly what the market's going to do. It's all about probability. So what we're always trying to do with everything in our trading is to find clues and find approaches and models that we can use to reduce that level of uncertainty. And of course, in doing so, you're increasing the level of certainty, but I think it's a good idea to look at it from the other point of view. But anyway, we're getting a little bit sidetracked now. So what I want to focus on in this video is to explain a situation to you that comes up quite often that helps you confirm that what you're going to be expecting to happen is likely to happen now, since you can confirm that there's a good chance that that level is significant beyond just the type 1 and type 2 close. I referred to it yesterday in the video about type 1 and 2 closes when I was saying about when something's beyond just being a coincidence. And today in our market selection service, I picked out something with US dollar CAD where it was that same sort of situation where something was beyond just a coincidence. So I thought we could use that chart, the US dollar CAD situation, and I could talk you through why that is the case and how that strengthens our trade setup. So we're going to jump over to the charts, but just before we do that, make sure you check out the links in the description box, including the one to our market selection service. If you haven't already joined, it's free to join, and that way you're going to get access to our videos each day where I talk you through the market I'm watching, and then you get to have the little nuggets of information like US dollar CAD, which I'm going to point out now. You would have got it before or during the situation unfolding. But anyway, let's get over to the charts and I'll explain everything. Okay, so first things first, I'm going to play you a clip from our market selection service video on Friday the 25th of May 2018, just to give you the overall context of the situation and so you can see the level or the scenario that I want to talk you through in this lesson. So let's go and check that out. Good afternoon traders, it's 33 minutes past 2 in the afternoon UK time, Friday the 25th of May 2018. This is obviously the second video of the day. Just wanted to do a bit of an update because I've been following US dollar CAD a little bit over the last few days when it was stuck in this range, but there was nothing particularly interesting for me there, even though it was very sort of dependable in that range. If we look at the hourly chart, you can see it was hovering around. I didn't really pick up anything there, but now it's in a very, very interesting area. So it's approaching this baseline trend line, which if I zoom out, you can see is going back all the way here to the first anchor point back in 2016. And recently it's confirmed that this significant level, this baseline, is still significant, it's still in action for us. So even though it dates back to 2016 or maybe even 2015 almost, it's still very active. It's something that we can depend on still. So there was the first touching point. There was the second interaction there, and then the recent one was here in, when was this? March, and I moved the anchor point to this one just to make sure that it's taking into account the recent interaction as part of the angle of this trend line. So since it's a baseline trend line, the price doesn't tend to want to push through it. It's the outline of the market, which means now, since we're sort of so far into the day, just starting the US session, not so long left of this week, if it does push through that baseline, then there's a good chance it's going to want to come back and close to the type 2. But if it stays on this side, then that baseline acts as like a backstop. So if you're entering any trades, you've got something very strong on your side. But that's not all. Remember I said we've been stuck in this range. Well, if we look at the hourly chart, the very top part of this range, which is over here where the mouse is now, if we map in a swing high there, we always take the candle body, just to make sure it's accurate, you can see we're coming off that as a type 1 touching point at the moment. There we go. And at the same time, I was mapping out a Fibonacci range around here, but someone pointed out to me that if you adjust this slightly to being over to here, then it actually is completely in line with that swing high. And when things like this happen, when there's two factors that are exactly the same, like without a pip difference, exactly the same place, I usually think of that as too much of a coincidence. That is a sign that that's where the significant level is. It's a very strong indication. Doesn't necessarily mean it's going to be a strong or a big opportunity, just means that's a very dependable area of the chart. And so I'm monitoring what happens here. Obviously we've had a lot of bullish momentum. I'm just keeping an eye on it, see what happens. All right, let's stop that there and let's get back to our lesson. So you should now understand the context of what was happening in the markets. The markets are now closed. It's the end of the week, so we can check out what ended up happening. You can see with the US dollar CAD baseline, the price did interact with it as a type 1 and then closed within the baseline as we anticipated would happen. But in terms of the hourly chart, this is where things are a bit more interesting. So we can see that if we draw the Fibonacci range where we had it in that video, I believe it was around here, is that right? And if we just make sure that that anchor point for the swing high is correct, it's about there. Okay, so we can see that more or less the two levels are in exactly the same place. Now the candle that I was focusing on when we put out the video was this candle here. So if we zoom in a bit, you can see what ended up happening there. It closed as a type 3. You see it broke through the level and then failed and closed as a type 3. Now, that wouldn't have been a situation where we would have entered the trade because a double confirmation with a type 3 isn't that good. However, you can see the next candle closes as a type 2. And you can see what happens next, we get that reversal. Now, obviously, after the type 3, we did get a bit of a reversal during that hourly candle, but it then ended up coming and closing as a bullish candle there at the level again as a type 2. So we had that bearish candle. So therefore it did what we would expect it to do on a double confirmation, followed by a couple of bullish candles, and you can see it's just consolidating around this level. That's not totally unexpected of a significant level. We always say that around significant levels there can be consolidation. Now this is a really important point to note, that in that market selection video I said that this level, having the two levels in the same place, makes it very dependable. Doesn't necessarily mean it's going to be a really strong opportunity. And this is something I also referred to in the video about type 1 and type 2 closes, that these are just one of the building blocks. They're showing us that this level here is significant, it's something to sort of focus on, it's important, but it's not necessarily saying it's going to be a big opportunity. We need to take into account other factors for that. So remember, at the start of this video, I also referred to 3 things that we're trying to figure out with our trade entries. We're trying to figure out how far the price is going to move if we're correct, how far it will move against us if we're wrong, and when it's going to happen, what the timing is for that trade. So this is all about the timing. You can see that when we get that double confirmation, the market does reverse a bit. However, we've had all of this bullish momentum, so it's not a surprise really that we didn't have an instant big reversal. We had consolidation instead, but we still had that reaction at the level. So anyway, let's get on to the fact that the two levels were in exactly the same place. These are the situations where I say it's beyond just being a coincidence. Because if you look at it, if you could predict ahead of time based on the characteristics that you use for identifying certain things in the market, and you're following the right rule for finding a swing high low, and we have that mapped out there, like the swing high from before. So that's one thing. If the price interacts with that, you can say, okay, there's maybe a percentage chance that that's because of that significant level there, and a percentage chance that it was just luck and it was a coincidence. But then if at that same time you have this Fibonacci range that puts an extension level on exactly the same place, exactly the same price level, then obviously the percentage chance that is like because of something and not so much because of the luck is increasing. So the element of luck's reducing, the element of it being that you've been able to predict that is increasing. Then after all of that, if you're able to say, okay, I need a type 1 or a type 2 close to confirm that significant level, then if you get that, if you get the type 1 or type 2 close, and in this case we've got the type 2, So that price, after moving all the way up here, has closed precisely, more or less precisely, on those two levels. Then you have the type 2 close at that price level, you have your swing high, and you have your Fibonacci level all in that same place. So if you think about the odds of being able to predict that ahead of time and for it to do what you expect it to do, then I think it's safe to say at that point that the percentage chance of you having been able to predict that is much, much higher than the percentage chance that it might have been luck and it's just an arbitrary level. You've predicted it with 3 different factors and it's ended up doing what you expect it to do. Or at least in this case it has, sometimes it won't. But therefore, in those situations when we have 2 levels in the same place, and this is what we mean also by double confirmation, but I'll just explain that in a little while in a little bit more detail. But if we have those levels in the same place, it makes that significant level very dependable for us. So if I have reason to believe that if there's some sort of path of resistance for the price, that is going to be a big move in the opposite direction, then if I can pinpoint that level with these 3 factors, then I know that I've got a good setup there. My uncertainty reduces significantly, and that's a good sign for a trade. Now, this is really important when you're choosing the right Fibonacci range as well, because of course I could have had it here, where it's confirmed there the C point on the 50% level with that type 1. You could also have had it really tight up like this, where it's confirmed as a type 2 on that 50% level. If we have the level, the Fibonacci range like this instead, then we end up having the level in exactly the same place. So in these cases, I'll favor this range that puts the level in exactly the same place as a major reversal from before. So in this case, even though the range is not the best in terms of confirming it on the C point, it's confirmed in a much stronger way by something else, and it's beyond just being a coincidence, and that's why I'll take it. Now, this tends to happen more with the swing high lows with the Fibonacci range, but the surprising thing is that the swing high lows is one of our weakest tools in terms of whether it's going to actually reverse the price or do anything to the price. So in these cases, it becomes dependable because I always think, what is the chance of having the swing high low on the same level as the Fibonacci extension plus the type 1 or type 2 close? The chances are very low unless it's actually meaningful and a significant level and it's there for a reason. So of course, the dependability of that level is high, but the strength of the reversal is not necessarily high because it's a swing high-low that's involved there. Now, let me explain in a little bit more detail with a different example. So here we have a baseline trend line. Now, at any point in time, you could have plenty of swing high-lows along there, and there may be points where the price interacts with, both of them at the same time. Now, of course, that is a double confirmation for us, but it's not as much of a unique situation. Like, it could be a coincidence much more than situations where you're looking at 2 horizontal levels, because the baseline trend line is moving at an angle, which means at some point it's going to cross over with any swing high low that you have on the chart. Whereas if it's a horizontal level, what are the chances that they happen to be in the same exact price level? So that's what I think in terms of when something is way more than just being a coincidence, and it gives me that confidence and that extra dependability in the level, but not necessarily a stronger setup. So let me just reiterate that just so it's clear for everyone. This coincidence of the different factors that we look for to confirm a level is helping us have confidence in that level being the correct price, but doesn't necessarily mean it's going to be a stronger reversal. It just means that we can rely on that level. So be very clear about that. When you see these things happening in the market, don't go all in thinking that that means the market's going to definitely do what you expect it to. It's just a more dependable, significant level. All right, guys, we're going to leave that there. But as I mentioned at the start of the video, make sure you check out the links in the description box, especially for our market selection service and our free Inner Circle mailing list. By joining the mailing list, you're going to get access to our 4-part video mini-series teaching you the foundations of our methods so that all of these things come together and you really understand what we're talking about more. Don't forget to subscribe to the channel and switch on notifications if you haven't already. And please do leave a thumbs up if you like this video. Comments and everything, leave them below, and I'll see you in the next video. Take care.